Hello, traders. It's 8:03 a.m. Chicago time on Friday, the 19th of February, 2021. This is episode number 1941, 1941. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Where's the market at? So the market is in a risk-on posture. It rallied into the close yesterday in what was a neutral extreme day in the S&Ps and a couple other indices. The weakest of which is the Nasdaq, although the Nasdaq also had a neutral extreme up close yesterday. And then it dipped down overnight and now rallying back in. We're pushing towards last week's high. We're trading inside of last week's range. So we'll cover that here in just a little bit. But overall, the posture is risk on. The leader today is silver again, picking up quite a bit, up 2.08% currently, earlier 2.8%. Currently up 54.5 cents, trading at 27.62.5. The Russell's pretty strong this morning, 22.38.40. The small caps have definitely gotten a lot of attention, a lot of attention from everybody, retail and so on. The Euro Stocks 50 follow with up 0.9, DAX 0.89, NASDAQ up 81 points, 0.6. Gold is up $11, but still below the $1,800 figure, trading at 1786, and the S&P's up 16 points, opening in a gap higher. This morning, the laggard is crude. Crude is coming off a little bit below $60, 59.85, down 68 cents or 1.12%. The bonds are down 25 ticks. The U.S. dollar is off 33 cents. The Bund is off 43 cents, and the 10-year note is off 9 big ticks. Cable still strong. The British pound against the dollar has pushed above $1.40. Wow, it's in a very strong uptrend and appears to be unstoppable. So that's where we stand today. A lot of news chatter, turning that down. What's on deck for today? The key elements. Let's see. The key elements, Yellen's comments on the U.S. stimulus. There's another surge of vaccine supply that's expected for the U.S. It looks like the current administration is still focused on this vaccine, and it's likely that the folks who want it will get it as promised by this summer. And that's, of course, lifting a lot of things. Airlines, renewable companies push Biden to make air travel greener. Power's returning to Texas, and so on and so forth. I'll let you deal with the rest. You can look up whatever you see here. The key pieces of the day. Currently, the S&P has traded 255,000 in the overnight session or the extended trading hours with a high of 39.31. Currently has about 41. Let's see. Yeah, about 41 points of range. Multi-distribution profile. The overnight point of control is remaining below, so we're escaping the point of control 39.0675. And actually, it's shifted up. The overnight point of control has shifted up 39.2550. Need to update that in my cloud notes. 39.2550 for Convergent members here. Just uploading. And so, as it stands right now, relatively strong trend. Let's take a look at what was expected yesterday versus what we got. Yesterday, played out pretty well in terms of what we expected. It played kind of a hybrid again of scenario one and scenario two. Scenario two was looking for a dip to 88 as an important basing area, with 80, which was highlighted here as a composite low volume node. So the expectation was it would drop. The expectation was it would drop through after balancing the overnight inventory. I was looking for it to kind of push up, drop through, and then push to 20. Okay, so 88 to 20 was the expectation. Expected it to finish around 09, come off and finish around 09. Here's what actually happened. We open up in the 38.98, just below the 3900 century figure. We do get a responsive spree here at 3906, but it dipped down into 38.80. So again, I was expecting 38.88, which it hit right here. Took a little bounce up to the prior day's close, mid VWAP. You notice that the mid VWAP is something I'm mentioning every day. If you're not tracking the mid and the VWAP, you're probably missing a little bit of the story. Not saying it's an end all be all or it's the holy grail, but it's just the market oftentimes has a reaction there, but also it helps us gauge what the action is. For example, over here pulls back to mid again for a small rotation and it pushes through. This is a first indication, now that it's pushed through the mid, this is a first indication that things are likely to get sloshy and whippy, and it's likely to continue higher. So it's just a gauge. If the market is trending or is moving directionally, it really isn't expected to push past the mid on a pullback. But in any case, back to the narrative here, expected it to bounce off the 88s, pull back, and then push to the 20 above. What it did is it pushed through to the 38.80 right here, this peak right here, the 38.80 MCHVN, CHVN. And then from there it started basing, and then we ultimately got back to, remember that, 39.20. It came all the way back to 39.1850, stopped just short, and the expectation was that it would finish up at 39.09, 39.09 right here. And look at where it finished yesterday. The close, yesterday's close was 39.10. 39.10, not bad, right? From 80 to 20 to finish at 39.10. Again, the expectation on scenario 2 is 88, not 80, but I can never predict what it'll do exactly, but I do have a plan for it. The primary scenario was responsive buying, which we got back to the 39.06, and then drop to 88, consolidate, fall to 80. Remember, I put these numbers here: 80, 78, potentially 62 before we bounce back up. And I expected the market to start following through to the downside and continue to sell off, which it did not do. A neutral extreme up day. How is that? What the hell does that mean, right? So the market puts in the first hour's range. That's called the initial balance. And the reason we track the initial balance on pretty much every product is if you look statistically, you'll find that the most important business of the day is done in the first hour, meaning that is when you most likely have the highest volume. That is when you most likely have put in either the high or the low, not the high and the low. You've either put in the high or the low for the session. There's about an 80% probability that the high or the low of the session is put in. It's actually lower, somewhere around 74% now. Historical probability, past performance not indicative of future results, but there's about a 74% historical probability that the high or the low of the session have been put in within that initial bounce. This is why we track the initial bounce. And then we track how the market responds to the initial bounce. So you see here, the initial bounce is this yellow line. It was put in right there. And you can see that we fell through and we had a range extension, then we came back, and this is where I expected, okay, pull back to mid, continue through the 80 to the 78, come back somewhere, continue to 62, and that would have been scenario, which scenario? Scenario 1, right? But it didn't. It extended down, pushed through the mid, put in a higher low. This was not really expected, but we put in a higher low. Tough to read. This whole area here was tough to read. And then it pushes to the other side and breaches the initial balance on the other side. That makes it neutral. This is a neutral day, a market that extends the low, then the high, or the high, then the low of the initial balance by 3 ticks or more. This makes it neutral. Most times the market will finish inside the initial balance. This is neutral normal. And then you have the alternative, which is neutral extreme, where the market finishes above the initial balance after breaking below it. That would be called neutral extreme up. And yesterday, not only did it close above, but it shifted the point of control to near the high. And what this tells us is the overnight session has a very, very high probability of continuing higher, and it did. The overnight session pushed to just about up here. So this is a reversal day from an auction perspective. This is a reversal day up, and so the I've been talking about, hey, selling, right? I'm talking about the market selling over the last 2-3 days. That opinion now changes based on what the market has generated in terms of information. And so now my primary scenario cannot be the selling off or continued lower highs. So yesterday we put in a lower high, so we're one time framing down. This is where I take a step back and say, okay, the one time framing down is likely to break, and if it does, then it goes into alignment with the bigger picture trend, which means that we are likely to continue higher, and that's where the narrative translates into a trade plan. But what this did is it played scenario 2 yesterday pretty well. It dug deeper than expected, went to 80 versus 88. 80 is the next level down. Again, there's a stock zone at the 80 if you look right here. Yep, this is the gray area. This is a stock zone. It's been there a while, and the market hit it and turned. So that brings us into what we've got for today. Actually, what I like to do is go to the composite next, because I don't want to talk about what it's done in the overnight session until we look at what it's done in the bigger picture. So here's where, we put in this high at 45. Remember, there's a ton of liquidity at 45. An iceberg up there traded some 5,000 contracts at that price. Very weak high, double TPO high on Tuesday, and then we triggered one-time framing down. We continued one-time framing down yesterday, and now we're breaking that one-time framing down. This is a shot across the bow, or that's naval speak, I guess. I don't know why I use it. This is a warning shot. In other words, it's a warning shot to people holding short that it is likely to now break and test whatever levels are above. The first being the point of control of this entire week, which is right up here in the 28 area, and it's already trading there. Currently it's trading at 24. It's pushed to 31 overnight, and so the next level up becomes 45. 45 being a weak high, it makes for 45 becomes this huge target. It's as big and bright as the sun up there, a sun in the clear sky, as the key target to hit, and that's where I'm expecting the market to go today. This is the narrative. This is the story. so far, and let's now look at what it's done overnight. So let's turn off the stock zones as we're in the review segment. We open up and we immediately test below. Now, note that the market has had a hard time holding below 3,900 for long, and has had a hard time holding above the 3930 for long. It's, once it's above, it magnetizes back to 3909, and then it tests below 3900, comes back to 3909. I mean, it closed at 3910, and all of last week it closed at 3909. And so what it's doing is there's a rubber band that's tied right here, right, at 3909, and every time the market pushes away, it's doing this. This is what's happening. And so what we have is a strong area balance which has shifted up to 3911 based on yesterday's action. The MC point of control shifted 3911, and we're trading above it. So given the volume that we've traded so far, which is higher than normal or higher than what's common these days, given the trend on this 30-minute bar chart for the full session, given that we are above full session VWAP, full session mid, the overnight point of control has shifted up, and that's a game changer. I really liked the overnight point of control being at 3906 here. But because the overnight point of control shifted up, we're expecting this to fall back through a little bit, base, and then start to move in the other direction. But overall, this is what the narrative is saying. We've done a great job testing down, right? And then we broke up yesterday. We came back, we tested that down channel from above in the overnight session, and here we are taking off, and this makes for a new channel up here, and it's got, this channel can break, but it's got a little bit of room yet. As long as it holds above the MC point of control, we should be in pretty decent shape in terms of pullbacks to buy. So that's my expectation for today. I know that's a lot of information and that's a lot of stuff to cover, but you've got to stay connected to the story. The story is what allows a trader to hold on to a big position, or put on a big position with confidence. To put on a big position in this current market and volatility is, somewhere in the realm of 90, 100 contracts. And having that story allows you to understand that, hey, if the trade goes against you by 3, 4 points, it's not the end of the world, right? So what are we looking for today? Okay, first of all, I'd like to invite you all to do this thing that we like to do every other Friday. Excuse me, I'm having a sneezing fit over here. I'd like you to take a moment and tell us your city, state, province, and country. You can do so by typing it into the live chat, by putting it in the Periscope stream, or by tweeting it. You can tweet it at me, twitter.com/futurestrader71. Sorry, folks, all of a sudden I'm having a sneezing fit here and I'm having to mute myself repeatedly. But do take a moment to tell us where you are. I find that very interesting. Okay, so what do we have for today? Today, with the overnight inventory being at well, it's zero. Hang on a second. Let's take a look. Wow, the overnight inventory is balanced almost. It's long. It's long 13% right now. So this is likely to be an open auction out of range. Expecting an open auction out of range. I'm looking for it to revert back just a hair, just because the point of control shifted up. But overall, I'm looking for a break of this 31, the 31 high, and then we start to tackle these prices above us. Last week's close and high at 35. As soon as we leave that, we are likely to attack this 45. The 45 is a double top and a week high, and it's the RTH high. So 45 is the key target of the day. If you're holding into the 45, look for a splat through, look for a spike through, pullback, consolidation in this area, and a grind. Expecting it to close above last week's close. If not, at 35, close at 35 again, but I expect this to be pushing a higher high. The number above that matters is 52 and 57 is what I have in terms of key areas above to test above the 45. We got to 59 in the overnight this past week, but overall, this is what I'm looking for today. Okay. The secondary scenario: open, test up, take out the 31, push down on an impulse, brings us back to yesterday's range, and then we battle our way back to this 39.11 and finish higher anyway. We're going to end up with a higher high, higher low probably, and a higher high, higher low, and so that's what I'm looking for today. I'll leave you with those thoughts. Again, let us know where you're at, and hopefully you understand the narrative. Take care, and I'll catch you on Monday morning.